welcome back to the channel. I appreciate you guys clicking on this video. My name is UV the Great, and I am represented by the Unique Trading Group. And I tell you what, if I were you, I would stick around. I have a very informative, juicy, valuable video for you tonight. It's all about precision trading, right? Precision trading. And are we about to rally? Is it rally time, or should we stay cautious? I tell you why, and I give you some very insightful thoughts to think about, specifically for the SPY going forth. So stick around and stay tuned. First, I want to give you this little book review that I have. Right in front of you, you see The Power of Paytience. This is my book that I created for the trading community. Whether you're immediate, advanced, or beginner, this book is very valuable for you. You can check out that link below in the description, and you should get you a copy, all right? Check out the book. It's about 100 pages, about 15 chapters, and I made this book so that people can get a good insight into the mind of a trader and what it really takes, along with some secrets and some insights that are very valuable. This is like a trading Bible, as some would say, and so I wanted to just push this, guys, and let you know that you should check this book out. It's very valuable. The Power of Paytience. Mastering emotions in trading while turning discipline into income. If you're disciplined, turn that discipline into some income. All right. This right here is a little review from Jasmine Parker. Our Discord name is Fiji. She joined the Discord group last year in November, I want to say. And she said, I absolutely love your book. It's everything you need to know in 113 pages. It's certainly a trading Bible. I find it very valuable and useful. Thank you for creating something that can truly help anyone if they just take the time to read. I just wanted to let you know I recently joined the Discord. All right. And so this was a book review from Ms. Jasmine Parker, and I wanted to quickly give you guys that. All right. Now, this is inside the Unique Trading Group Discord, and the link is below in the description. Join the thriving community, right? I've been doing this for a while. Started a Discord last year. I've been helping folks make some money, gain some insights, okay? And this is not financial advice. Of course, I am only a mentor and a coach, all right? So this is for educational and entertainment purposes only. Let's go ahead and hop over to one of my sections in the Discord called Stock Talk. I'm sorry, not Stock Talk. We want to check out the Unique Outlook 2025, okay? I'm going to give you the backdrop of what I think is going on, and we're going to hit the charts. All right, so stick around. All right, the Unique Outlook 2025, precision trading in motion. All right, it goes as follows: price action reigns supreme and market structure dictates survival. All right, right now the battlefield is clear. 565 is the daily battleground. Hold above and we set the stage for an algo short squeeze into 569.54. okay, fail that number 565 and we stay trapped in a weekly chop. Okay, we recently had a relief rally from all those weeks of us dropping. We had a big bounce last week on Friday. All right, but for 4 weeks we've been in a controlled descent. 569.54 isn't just a number, guys. Okay, it's the key wall separating breakout from rejection. If we push into this level, expect supply to kick in. Supply meaning resistance. There's a wall. Okay, this is where professionals unload, not blindly chase, secure profits, reassess, and don't get caught in a liquidity trap. All right, so here's your edge. If 569.54, 570 flips to demand, meaning support, a place where we buy the market SPY to the upside. All right, buyers and sellers agree. That's when we get aggressive. March 14th of this month, of course, March 14th, the weekly close holds weight. Any substantial bids above this zone open the door to 575 and 580. Okay, if I'm loading 10 spot contracts, for example, I'm positioning them where risk is defined and the reward is exponential. As of now, 565 remains unclaimed. It's the midpoint of the March 7th range candle, 565.63 low. Take a picture, screenshot this, or write it down. I'll read it again. As of now, 565 remains unclaimed. It's the midpoint of the March 7th range candle, 565.63 low. If buyers show up here, it validates our thesis. 570, 579.54 is magnetized. Look for price to breach to that level. All right, the catalysts are lined up. Forex factory data, Trump tweets, and the March 21st quadruple witching date is coming. All right, quadruple witching date. All right, these events are the fuel. We just need to match it. All right, we just need to match to light the fuel. And if you're not familiar with what quadruple witching is, you can chat GPT it or Google it and you'll find out what that is. But I'll give you my brief description. Quadruple witching is when major indexes expire. All the contracts expire, from futures to Forex to options. Okay, they all do simultaneous close or opens, and people reposition their positions and you get a lot of volatility. Okay, this is a matrix of number. Good luck to you guys out there. And however, 560 becomes resistance. Okay, it's game over for bulls. A rejection below 565 shifts the bias to downside retest. Profit taken from March 14th rally will kick in. All right, dragging us to key levels 555, 550, and 549. So execution over emotion. Patience is at 565. React, do not predict. Surgical exits at 569.54 unless strength confirms that it wants to be demand at the 569.70 level. If the man steps in, we ride it to 575, 580. All right, make sure you have efficient time on your contract. All right, see profit, take profit. If you're a day trader, you want to get in and move your stop up as you're in profits. If you're a swing trader, you might not want to put a stop on it if you don't know the percentage or dollar amount to put it on, because the market will humble you and take you out of the move just before it goes where you want it to go. All right. So again, if 560 turns into resistance, 560 turns into resistance, brace for 555, 550, and 549. Trap avoidance is key. Secure profits and absorb liquidity. This is not guesswork. It's precision, execution. Stay sharp. Are you ready? I'm ready. All right, let's head over to the charts, guys. All right, what do we have here on the daily chart? Okay, if you pay close attention to the chart, hopefully you can see it. Okay. All right, this is the daily time frame on SPY. Currently, right now, we have what you call a higher low. Now, if you checked out any of my videos before in the beginning, I talk about market structure, simple things you learn when you first start trading. A bear trend and a bull trend, right? Higher lows and higher highs is an uptrend. A bull trend, meaning going up, and lower lows and lower highs equal a downtrend when the price is going down, okay? This is a downtrend. This is a high. This high is lower than this high. Pay attention to the cursor. This low is lower than this high. Price did not continue up. We still rejecting. So this is bear structure, bearish momentum. Lower highs and lower lows. Okay. Right here is an up market. Okay. Quickly. All right. Wow. We have higher highs, higher highs, higher highs, higher lows, higher lows. Simple. Okay. Now, right now, on the grand scheme of things, when you squeeze in the charts, you can see that this point here, 549, all right, is a higher low than this low, okay? Now, could this be a bear market just because we have this big move down? Well, we haven't passed this last point of 539. We haven't, all right? Could we retest those lows? It's possible, but as I inform you in the Discord room, right, be prepared and know the levels, okay? So right now, this is telling me we're a little bit more bullish for a relief rally. The market is oversold and big money, smart money has stepped in. However, do not get overly bullish, and I'll tell you why. Now that I've established that, let's squeeze the charts. I want you to see this. Right now we have a hammer candle. All right. Friday last week we rallied. All right. There was a relief rally from all this big drop. All right. Again, we have a higher low. This creates a higher low from the previous lows here. This low here. All right. So we have higher lows. All right. Market structure. Okay. 571 is the point of control. All right. 571 is right above our 569.54, 570 midway point. I'm sorry, not midway point, but a decision point, which would be around right here, top of this range here. Okay. All right. 571 is the point of control. All right. The volume profile is a future forward thinking indicator. I will not go deep into that in this video, but it's something that I like to use. All right. There's your gem. A volume profile is a future forward thinking indicator, not like moving averages, which are lagging indicators. I want to encourage you guys to be ahead of the move. all right, to be ahead of the move. That's what's most important, all right? And so if 571 is the point of control, that's what you want to look for. You want to see the high of this range, right, which is 563.83. Write this number down. We're on the daily time frame. 563.83 is the top of a range on the daily. That number has to break and hold as demand for us to see further upside, which will be an open range breakout, a ORB, all right, open range breakout, okay? And the numbers goes as follows in the Discord, all right? Right now we are at 562, okay? If 563 breaks above, right, and we see momentum based on volume and order flow, all right, Monday through Friday next week, all right, whatever day it shows itself, you want to see volume and follow through, all right? You want to see more than average volume in order for us to get to 565, excuse me. 565 again is your midway point, all right? It's the decision-making point where people can get trapped. So if you're already in swings like I am and these numbers hit, I am going to shave off some profit. If 565 hold as demand, all right, during the day, and I'm monitoring, right, and I see it serving as a place of demand, a double bottom, or, you know, I see prices holding there, I will try to ride it up and maybe swing to 569. Okay, this is the plan. Okay, right now you have a 21 at 579, 580. Okay, we can easily rally further, hit the 21 and reject, and act as resistance the same way it did here. Okay, or we could go up here. All right, retrace a little bit for a Fibonacci retracement. All right, breakout pullback, meaning we broke out from this level here. All right, very significant level, the 571 point of control. We broke out, bounced off of the 21, it rejected as resistance and fell. All right, but a breakout pullback meaning it broke out from where it came from and it pulls back to the point that it dropped, that it came from. All right, and so we could get that, and we could get a continued rally to the upside. All right, don't chase it, catch those pullbacks. Okay, this is a scenario. This could very well much happen. All right, now a lot of people are looking for this. All right, I personally know some people who are looking for this move here. All right, they're looking for some sort of rejection around these levels we called out. And you can rewind the video if you need, check out the beginning. All right, a rejection. All right, if we reject here, we could fall back and create new lows to 540. All right, I'm telling you, this is a scenario. Okay, doesn't have to happen, but I just gave you 3 scenarios and I gave you precise numbers. It's about precision. Okay, could we be rallying? We very well much could be rallying. Okay, we are at a pivotal point. All right, now I'm going to get off of this and I'm going to toggle over to the weekly and the 1 hour. First, let's do the 1 hour. Okay, I want you to see where we are in the 1 hour. I like the 1 hour as a day trade mechanism. But this market has been very wild and very wild swings for those who are just only wanting to go to the upside. Got to be able to switch your bias and understand and trade what's in front of you. It's very important, or you will get slaughtered in this market. It's just a fact. Okay, so let's see what we have here. All right, right now we have on the 1 hour. Okay, we are above the 21 SMA. This 21 simple moving average, or 21 EMA exponential moving average, is a call trigger for me. It's my edge, and I'm going to make this a little bigger for you so those who are watching can see. Okay, I want you to see this visual. Okay, see what we have here, right? Now pay attention. All right, we have a W shape forming. This is a bullish structure. However, we haven't got past this neckline of the W. Again, ironically, like we mentioned in the Discord chat room and on the daily time frame, that 565 is that decision point. All right, it's the midway point of this entire move. All right, and price has to break above 565 in order for us to see any continuation to the upside, or it could reject the same way it did here. You already see what could happen. All right, and so if we can get past here, all right, when the hourly is showing some momentum with volume and order flow, all right, volume has to accompany that move, all right, to that 569 area. Okay, right now we are above the 21. I use this as my call trigger for a probability edge, right? High probability. If price action is above the 21, I want to buy calls. If price action is below the 21, then I want to buy puts. But the best way to think about this is the risk to reward. All right, I like to use 1 bar stops. So let's say, assume hypothetically, if you took a call above the 21, you want to put your stop below that bar. This is making sure you have the best risk to reward. Risk to reward is the best way to flow like water in this market. Okay, you have to define your risk, your entries, and your exit. All right, you watching this video tonight, whoever you are, this is exactly what I mean. You're preparing yourself for the next day, Monday. You're preparing by going over this video and studying the numbers and looking at the chart. All right, so 1 bar stop. If you enter in, all right, keep your losses small. You always want to stay in the game. Okay, keep your losses small. All right. Next week we are looking for a retracement back to 559. All right, this could be a breakout pullback zone right here at 559. We've already broken it, right? All right, maybe a possible head and shoulders, who knows? But we are above the opening price from last week, Friday, and that is bullish, right? We are making what we call bullish structure again right now on the hourly. Higher highs and higher lows, okay? There's a low, there's a higher low, there's another higher low, okay? But we have not made yet on the hour, which is why I said be cautious in this video. We have not made a higher high yet, okay? Once we break this higher high, that's 2 things working in your favor. Remember we talked about 565 being a decision moment? Now that you know that, it's an algo for calls. If it holds as demand and we break that and hold, it will be a higher high. That's bullish momentum, okay, to the upside. I want to wait for a pullback here. If we can get a pullback, right? But we all don't know until we wake up Monday, check the market at pre-market, and we see what price action is doing. And because we are studying now, we're properly prepared so that we prevent poor performance. So not only does this breaking 565 create a higher high, but it's saying that the bears are exhausted and the rally could be confirmed further to the upside. All right, and always watch for other major resistance levels. Okay, and what you want to watch for is, all right, watch for, bear with me as I navigate this screen. All right, quickly, these are parallel channels. They work. I've been using them for a long time. All right, we've already broken that. Okay, simple line break. All right, we've already broken that. I want to do the measure parallel channel, the same up here. Okay, all right. So these are the numbers. This is what you're looking for. As of right now, this is what we're looking for. Okay, now let's go to the weekly, and we're going to wrap this video up. Remember, we have data next week, Forex Factory. So you want to watch the news releases as catalysts for price. Okay, you should literally watch the news releases to see how everything works as far as price action, what happens with it, right? All right, bear with me again as I navigate the screen. I want it to be clear, very, very clear, okay? Very, very clear. Let's remove this, right? Remove this as well. All right, what do we have here? All right, we have a hammer candle above the point of control, which is at 561. Ironically, 560 acts as a place of demand. We deal with auction theory here in the unique trading group. I talk about this a lot in some of my videos. But auction theory is basically saying that this is a casino and it's an auction, and the market makers, they have to cover themselves or make sure that everyone gets paid, right? When you go to a basketball game or a football game, you have a referee. And no matter the team, no matter what team wins or loses, the referee always gets paid. That's his job. And we want to think like the market makers, okay? We don't want to be chasing moves. We want to react, okay? And so right now, we have created a bottom here at 549 and another higher low, because this right here was a previous low, right? Back on the 3rd or September the 3rd and September 9th of last year. All right. And so right now we have bounced. All right. What you want to look for is, now let's be clear. Let's actually take all this off of the chart. I want to be really, really clear with what I'm saying. All right. The numbers that I gave you guys in the Discord comes from the weekly analysis. It comes from the weekly analysis. You see right here? I'm sorry. See right here where my cursors are? This top right here, this price action right here. All right. If we break over these highs, all right, if we break over these highs, it means that some old players are stepping back into the game. All right, old players are stepping back into the game. All right, that's what I'm waiting for on the weekly, for these old prices to be breached. All right, and you have some resistance. Have resistance here at 574. Okay, on the weekly. All right, if we break over 569, all right, 54, I'm going to be thinking about swinging calls back to the upside. Okay, at least to 586. That's just me. All right, I want you to notice something. Pay attention to this. Here we have the 21 EMA. Remember the gray line. The gray line. I use this as a probability edge for me. All right, high probability. If it's above, I want to take calls. If it's below, I want to take puts. So you can clearly see that. So here we breached the open range breakout of this high. The high of this candle got broke back on August 5th of last year. The closing price was $532.99. Excuse me, $532.99, right? The edge in the open and close dynamics means that if I go over to the next candle to the right, we haven't moved yet. If I go over to the next candle and the price open up higher than this candle here, close, then we're bullish. As you can see, it did go up, but let's check the numbers for the sake of the video. The high was 532. The close was 532.99. All right, let's see what the opening price was on this candle. The opening price on this candle was 534.21. All right, and so it was $2 higher than this previous close. That is bullish momentum. All right, same thing happened here. All right, I don't have to go through the numbers to see. You can see it got above and we rallied. Okay, same thing happened here. This candle opened above and we rallied. Price got took, profit got took, but we still rallied above. If you can catch these edges, man, it really matters. Okay, same thing happened here. All right, eventually price opened above in this range and we went up. So I'm looking for the same thing here. I can go back months and days and weeks and years and you see the same setup. See that? Same thing. All right, we are just really overextended, and that's why some people say, oh, we can rally. Could we rally, or are we supposed to be cautious? I say both. I say have a game plan and a scenario, and you'll be prepared for next week. Okay, now before we go, I want to show you this economic data for next week. Monday we have core retail sales around 8:30 in the morning before market opens. No more major red star news. Remember that this data comes out during the market open and it affects the price. You should start paying attention to that. When I'm trading live in the trade room, the folks who join me, they see how precision works and how I execute. It's very precise. All right, execution is on point. All right, because I'm watching these things and I understand it. It never changes. All right, Tuesday 8:30 we have core CPI, trim CPI, CPI this, CPI that. Right before the market opens again. All right, we are at the whim of that before the market opens. We don't have any more red star folder news as far as tonight. Later on Tuesday. Wednesday we have some BOJ press conference. We're gonna have some FOMC members speaking. All right, 2:00. This is gonna be a big one. Wednesday is going to be a big one. Everybody's waiting for Wednesday. Wednesday could be a very pivotal moment for the SPY. All right. And to remind you, quadruple witching is on the 21st. Okay. Remember, we talked about that in the Unique Outlook 2025 in the Discord. All right. 21st of March is quadruple witching, which means a lot of contracts expire. Okay. All right. Pay attention to 2:00 Wednesday. This will say a lot whether the Feds are going to change interest rates, raise them or not. All right. I think the price is already baked in, but we will see. All right, we have some unemployment claims later on at night. Here comes Thursday. We have more red star folder news. I'm telling you guys, these red star folders act as a catalyst for price. Don't get caught in that. If you do not know what you're doing, I would not trade or get into anything during these moments. Like here, Thursday, 12:50, red folder. All right, it's gonna be a very pivotal moment. Okay, catalyst moves price, specifically SPY. It's Friday. Here we go. Friday is quadruple witching day. Now this whole week is quadruple witching week, so expect volatility. Expect a lot of price swings. Expect ranges, expect volatility, expect the unexpected, okay? Because volatility is going to be present because contracts are expiring. Hedge funds and institutions are repositioning their price. Being ahead of the game and knowing about this can help you prepare, all right? Quadruple witching, all right? Now, last but not least, here is the TLT market, the bond market. All right. Now, if you know anything about me, I talk about this in the Discord and in my videos. All right. You can check out that video, Trading Secrets, Flow Like Water for the best risk to reward, right above here. Okay, I talk about how the TLT market is a safe haven for people when the SPY is failing. All right, they want to put their money somewhere, and when the TLT, the 20 plus year Treasury bond ETF, which is what the TLT is, when this goes up, SPY goes down. When it goes down, SPY goes up. These are simple yet effective things. You can trade them side by side on a 5-minute time frame, a 2-minute time frame, an hour time frame, and you can see how they react differently and correlate. All right. Okay. If they're both moving the same, meaning TLT and the SPY is going down, I wouldn't trade that. Okay. Called backwardation and contango. Okay. However, most of the time you get clear direction. All right. The TLT market has been going up since January 14th, and what have we been doing? We have been falling. Granted, their SPY has been falling as the TLT goes up. Okay, you can check this and back test this. All right, even though we had price swings of profit taking. All right, that's going to happen in the market, but the overall trend was up. All right, and right now we are below my 21 trigger. 21 EMA. Remember I said I like to buy puts and sell the market below, and I like to get above it for calls to bet that the market will go up. Right now on the daily we are below it, below my 21. All right, but we still are making higher lows. We haven't made a higher high. The market structure is saying, right, that we have lower highs, and so we're in an indecision moment, possibly because of the data that has to be released next week. Guys, be very, very careful. Okay, next week I really urge you to be careful. Promise you, I would never lie to you. I've been doing this for 8+ years. When the TLT market goes down, like I see it trying to go down here, you're going to see immediate rally. Doesn't mean it's going to just continue to flush all the way back down to 89, but as it moves down, you will see some pressure up. So watch those numbers on SPY that I gave you. If 565 holds, 569 will probably be the next target based on this TLT movement, which could go down. Okay. This is very important, all right? Very, very important. And don't ever forget it, okay? All right? We have the Fear and Greed Index, all right? Fear and Greed Index is about 21. There's a famous quote by Warren Buffett. If you know who that is, it says, "Be fearful when others are greedy, and be greedy when others are fearful." And we are at extreme fear. Could this possibly mean that we could rally? Only time will tell. But I suggest trading with precision and reacting, not predicting. And remember, proper preparation prevents poor performance. Always define your risks, your entries, and your exits before every trade. All right, guys, that is it for the video tonight. Today, whenever you decide to click on it, if you found this video valuable at all, and insightful, do me a favor. Hit the like button, subscribe to the channel, hit that bell notification. That way you're informed of when I release valuable videos just like this one. All right. Check out my book below in the description. Join the community, the website for my book, and the links for my Discord is all down in the link below. Consider joining and become an affiliate. All right. In my WAP community. All right. You guys have a blessed day. And until the next time, peace.